All right, today we are diving deep into a fascinating company at the very heart of the digital revolution, Newgen Software. And, it presents this classic puzzle for any investor. What happens when you find a company with financials that are, well, pretty much perfect, but its stock price is already through the roof? It's the ultimate showdown, and we're going to break it all down.
So first, let's just set this stage a little bit. Think about it. From the bank on your corner to these massive global companies, everybody, and I mean everybody, is in a mad dash to digitize their operations. So why? Why this huge, sudden rush?
Well, this whole thing isn't just some passing trend. It's a huge, multi-billion-dollar tailwind pushing the entire software industry forward. And any company that can help other businesses win this race, well, they are in an unbelievably powerful spot. And this is exactly the world that Newgen Software lives in.
So what's really fueling this fire? Well, for sure, the pandemic lit a match under everyone to get online, and fast. But it's actually so much more than that. Companies need to build apps at lightning speed now. They're desperate to make their operations more efficient. They're drowning in new regulations they have to comply with. And of course, everyone is moving everything to the cloud. Each one of these things is a massive market all by itself.
So who's out there building the tools for this digital gold rush? Well, enter Newgen Software. They provide the fundamental platform that helps businesses automate everything and build what they need super fast. In a way, they're selling the engines for this massive global race to digitize.
So what's their secret sauce? It's this thing called a low-code platform. Okay, so forget about writing complex code line by line, which can take months and months. Instead, imagine building a really powerful business app just by snapping together these pre-made digital building blocks. It's way faster, it's cheaper, and it lets companies change things up on the fly. This is the magic at the core of what Newgen sells.
And, they've built a really smart business around this idea. First, they sell the license for their main platform, which is great. But then, they also charge to customize it for each client. Then they get ongoing revenue for maintenance and support. And they charge for hosting it on the cloud. So you see, they're creating all these reliable streams of income from just one customer. It's brilliant.
Okay, so that's the story, the big idea. But does the math actually back it up? This is where things get really interesting, where you see the incredible strength of this company. Let's pull up Newgen's financial report card, and honestly, it's about as close to perfect as you're ever going to see.
Let's just start with maybe the most impressive number of all, 0. That's it. That's how much debt this company has. In the tech world, where companies often borrow tons of money to grow, being completely debt-free, that is a massive sign of strength and just incredible financial discipline.
Okay, next up, growth. Over the last 5 years, Newgen's revenue has grown at a compound rate of 28.5% a year. Now, that isn't just one lucky year. That is powerful, consistent, rapid growth, year after year after year. It tells you their product is in seriously high demand. And this right here, this shows you the power of that business model we talked about. 72% of their revenue is recurring. That means it comes from things like subscriptions and maintenance contracts that customers just pay for every single year. For any business, this is basically the holy grail. It gives you stability, predictability, and just a fantastic foundation to build on.
And it's not just those big 3 numbers either. When you really dig into the nitty-gritty details, the story just holds up. Whether you're looking at their ability to pay their bills, their cash flow, or the return they're making for shareholders, the verdict is always good to excellent. This is the textbook definition of a financially sound company.
So, if this company is a debt-free, high-growth cash-printing machine, why isn't every single person piling into the stock? And this brings us to the other side of the story, the price tag. What's the catch? Because there's always a catch, right?
This slide just lays out the dilemma perfectly. On the one hand, you have every single reason to absolutely love this company. But on the other hand, you have every reason to be super cautious about its stock. The market knows this is a great company, and it has priced it that way. Its valuation is high, which means you are paying a premium price today for all of that quality and all of that future growth.
But context is key here. When you compare Newgen to its competitors, its PE ratio, which is just a common way to measure a stock's price, is actually below the average for its peer group, and yet its revenue growth is way higher. So yeah, while it looks expensive by itself, you can make a very strong argument that you're actually paying a fair price for a much better company.
So how does an analyst weigh these two powerful competing forces? You've got this near-perfect company on one side and a stock price that already seems to know it's perfect on the other. What's the final call? How do you balance all this?
And here it is. The final verdict from the analysis is a buy. But, and this is a really big but, it comes with a very important warning, with caution. This recommendation says, yes, the business is undeniably fantastic, but it also respects the risk that comes with that high price tag. It's a big thumbs up for the company, but not a blank check for the stock.
And here's the math that gets them to that recommendation. Analysts basically map out different possible futures. In the most likely scenario, the base case, they think the stock's true fair value is around 1,450 rupees. Now, even after paying today's premium price, that still leaves a potential upside of almost 17%. And it's that potential return that justifies the buy rating, even with all the risks.
And all of this leaves us with the ultimate question, the one at the very heart of this whole analysis. We've seen the flawless financials, we've seen the powerful growth, we've also seen the really steep price tag that the market is asking for. So it all just boils down to this one thing. When you find a truly, truly great company, is any price too high to pay?